we will cover the opportunities that exist in the healthcare service sector in India. If you do believe that this current administration is believe in productivity improvement, is believe in efficiency, and if it believes that obviously the inefficiency will have to die to make room for efficient administration of the corporates, then the sector that we will focus today will have a fantastic opportunity for investment. Let's look at how do I invest in stocks, in the healthcare stocks. As you can see from my previous videos, I know a thing or two about the healthcare sector. So it's because I've seen it, I live it. This is what I do for my living, looking at and researching the medical device companies. Let's look at the healthcare sector right now. The important thing to understand is these sectors, we have to understand the headwinds and the tailwinds. The headwinds come in the way of the policies set by the government. Obviously, this government doesn't like the people when they try to squeeze out a lot of money for unimaginable profits. They don't like it. They will make sure that they get a fair price for the fair manufacturing practices. And all the policies and regulations put forth by the government will help in regulating this segment going forward. Because as you can see, this segment, this industry itself is highly fragmented, and if anything is a clue, because of all the GST implementation, the fragmentation will die. There's a room for consolidation on the players with efficiency, productivity, and the scale, and the volume will grow much bigger in scope. So the companies that I plan to cover this in this video are Apollo Hospitals, Thyrocare, Dr. Alpeth Labs, Healthcare Global, and Fortis Hospital. Some of them are speculative. Let's go through the couple of important things, important websites that you can go and understand the important parameters for before investing. There's a lot of famous investors that you can clone, but the problem with the cloning is we don't know what's the reason behind the investment time horizon. So as a retail investor, the only thing we can do is, you can go and look at the websites. There's a lot of people out there who are really selfless service doing to help the investor community out there. One such website is called a Screener. It's done by the Mittal brothers. It's free. You can get a lot of information from it. So obviously all the stock brokerages has a fantastic chart on the Screener platforms out there. The platforms will have everything that you need to know. So just don't believe in the news. Understand, analyze the sector headwinds, the growth, the earnings growth. What are the opportunities lie ahead? Because the price is in the consensus, so you have to be contrarian a little bit if you have to get a better gains. Based on using all these websites, we can understand the reasons behind our investments too. Let's look at so this is like right now I have a free account, so just go to TradingView. It will take you to software, so you can go for a chart, or you can go to Screener. Let's go to chart. Then you can start picking up all the. If you want to change the screen, if you don't like the black background, if you want to change the background color, you can go right click, you can go to color theme, you can go to light. For me, I want a background to be more darker to stand out. So let's go this way. So a couple of important things that you need to understand. The bottom line is the volume. So the top is the different candlestick pattern out there. The three things I will look at always before investing. I'm an investor, I'm not a trader. Look for is there a trend, is there a pattern, and is there a squeeze? Okay. Now, if you want to go and put an indicator on your screen, just keep it simple, guys. Before looking at the charts, don't put all the indicators out there. Just go to simple indicators. Go to RSI. So always make sure that is there a divergence between the price and relative strength index. So let's go, but most important parameters that I use is exponential moving average, 200-day moving average, and a 50-day moving average. You know, they say the golden cross is when the 50 crosses the 200-day moving average above. It all depends on the time frame you set. If you go for a day time frame, it's all in the period that you're setting it up. So let's go, since I'm an investor, let's go for a day time frame. The longer time frames, people go like institutions, they go like a month, weekly, and the traders, they go for 15 minutes, 5 minutes. It depends on a day trader or swing trader. So in this case, I will only do for, if it's a 50 moving average crosses above 200, it's a golden cross. If the 50-day moving average crosses below the 200-day moving average, it's a dead cross. So those are two important things that I watch out for. Then look out for a relative strength index. I will see if there's a divergence between the price on the strength of the index, and the moving average convergence divergence. So if you really want to go understand the liquidity of the stocks, that's for large caps. You have to understand the difference between the bid and ask price. The narrower the bid range, the more liquid the stock is. So that's for the traders. We don't care. We just go for mid-cap companies. So right now the mid-caps is if you want to be a contrarian, and if you think that this administration will follow through all the reforms, it's gonna help the people who are productive, help the people who are efficient, and efficiency is going to win at the end of the day. Then the mid-cap, well-run mid-caps is the best place to invest in. Let's go to Dr. Lalpat Labs. So price earnings, let me make it a simple way of explaining a price earnings to you. Most of them might know already these formulas, how to do that, but for new investors, I'm going to make it simple. Okay, let's say the market cap of a company that you're looking at is 1 lakh. All the shareholding structure, but let's keep it simple. Let's say 10,000. So to find out the price of each equity share, let's take the market cap divided by number of shares outstanding. You get 10. So 10 rupees. The price, let's keep it units. Let's don't give it a rupee or a dollar, whatever it is. Just keep it's 10. So out of this 10, out of the company makes an earnings of 20,000. Okay, so that's the yearly earnings the company, that potential company that you're looking at, is making. So now you take the 20,000 earnings divided by number of shares. So for each share the earnings is 2. So to find out the price earnings, what are you going to do? The price of each share is 10 divided by earnings per share. So that's 5. Now for basically the price earnings is for each amount of let's say unit of 1 that you invest in, what is the return that you're going to make on the share, right? For here you are investing 10, you're getting back 2, so the 20% price by earnings is 20% investment. Now if you put the risk-free, they always equate to the 10-year treasury yield, but again since in India, let's look at the FD, risk-free earnings investment on a fixed deposit. That's 7%. Now you're getting a 20% investment on your equity because of the risk premium. So you're gonna risk, because investing in equity is always a risk, because it depends on a lot of micro factors, economic factors. Let's say the 20% return, which is a very decent return. Now if the company is willing to give like a 50% of the 10% of the earnings as a dividend, and the rest they're putting back into the company. So that means the price to book ratio, the equity per share is nothing but the book value. That means the book value of the company will keep growing. So that's since they will be, the assumption here is they will be able to sustain and improve the earnings yield year over year based on the growth trajectory the company puts out, thereby increasing the book value of the company. So initial, you have to find out, okay, for what's the initial book value, what is the ending book value for any given period of time. Is the company able to make the money, make the return on the earnings that you are reinvested back into the company? So without explaining more and more in depth, let's basically keep these four things into factor, guys. Your stock, basically the price dictates a lot of things, right? So that your stock must be a stable stock and understandable stock. Okay, on the stock, the company or the stock, whatever that is, must have a long-term prospects, and the company must be managed by a vigilant and efficient leaders. And the stock, finally, when to give you the margin of safety, the stock must be undervalued. So what are the parameters they look for undervalue? They gain the price to book value. So you don't get all those things in that will in the best way for us to invest on. So that's why you look at that, go to the technical factors and look at different technical parameters that will help you out. So if you look at this, like I told you, I always invest in stocks that are above the 50-day moving average. Now you can say price above 200 SMA, then 52-week. Fundamentals, you can put in sales growth past 5 years. Let's go. So you bring it down, you can narrow it down. Like I told you, healthcare sector, if you believe in it, that all the headwinds and tailwinds of this sector will come into play, because like the government